Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 26th of November 2022, and we're publishing our gold and silver weekly update for the week ending the 25th of November. Last week, frankly, was a pretty dull week for economic data, but this coming week could make a significant difference. Why? Let's take a look. Let's see what happened to gold and silver first. Gold rose $4 last week, rising from $1,751 to $1,755, having hit a high of $1,761 and a low of $1,732, a rise of just 0.25%. In sterling terms, gold finished the week at £1,452. That's down £21, showing the strength of sterling, and in euros it closed at €1,687. That's down €9. Silver rose 69 cents, rising from $20.95 to $21.64, having hit a high of $21.70 and a low of $20.59, a rise of 3.25%. In sterling terms, silver closed at £17.90. That's up 28 pence on the week, and in euros it closed at €20.78. That's up almost half a euro, 0.48. The gold to silver ratio, of course, fell from 83.6 to 1 to 81 to 1. Now, the difference between gold and silver's high and low was $39, exactly the same difference as the previous week. And the difference between silver's high and low was $1.11, a little less than the previous week's difference of $1.46. Now, we did predict last week that we expected to see gold trading between $1,700 and $1,800 and silver trading between $20 and $22, and both kept within this predictive range. Let's now look at other financials. Bitcoin currently stands at $16,582. That's down $86. Equities were mixed on Friday, but stronger over the course of the week. The Dow Jones closed on Friday at 34,347. That's up 602 points on the week. The S&P 500 closed at 4,026. That's up 61 points on the week. And the Nasdaq Composite closed at 11,226. That's up 80 points on the week. So 602 up for the Dow, 61 for the S&P, and 80 points for the Nasdaq. Oils were down again this week, after a very heartening fall these past couple of weeks. Brent crude closed at $83.63, that's down $3.99, and WTI crude closed at $76.28, down $3.80. And as we stated last week, if we can get further cuts in these prices, we may very well see inflation continue to fall, thus helping to reduce the size of future interest rate rises. Of course, the rate will be still well above the Fed's planned 2%, but most of us didn't believe that was going to occur anytime soon anyway. Now, the dollar index stands at 105.95. That's down 0.98, almost a full point on the week. Let's now take a look at the economic data announced last week, which was relatively little, and what we have coming up this week, which is quite substantial. Okay, so if we take a look at the economic data announced last week, of which, frankly, coming out of the United States was very little, we can see that on Wednesday, durable goods orders came out higher than both expected and the previous month. So did core capital equipment orders. The initial jobless claims were higher on a weekly basis, and the continuing jobless claims were higher. This isn't surprising, bearing in mind rising interest rates. The flash PMIs, both manufacturing and services from S&P, were lower, though we are more interested in the final PMIs as opposed to the flash ones. The UMich Consumer Sentiment Index was higher, both than anticipated and actual the previous month. And new home sales were also higher. Of course, had Thanksgiving holiday, and we hope everyone had a great day last Thursday, and there was nothing scheduled on Friday. However, this week is somewhat different. Whereas on Monday we just have an interview by the St. Louis Fed President James Bullard, we start as the week progresses to have increasingly important data. On Tuesday, we have the Consumer Confidence Index for November. Wednesday, we have the ADP employment report with anticipated 200,000 new jobs, and this will give us a good guide, not necessarily a guarantee, but a good guide to what's going to happen on Friday. On Thursday, of course, we have the initial jobless claims, but we have the PCE price index, and it is anticipated that the core PCE will fall from 0.5% in September to 0.3% in October. And this will give an indication as to whether the interest rate rises that have been introduced is in fact working. And the thought process by economists is that the core PCE price index year on year will fall from 5.1% to 5%. Also the same day we have manufacturing index, both the S&P and the ISM. Then on Friday we have the very important non-farm payrolls, but this would have even more significance had it actually been announced before the PCE figures, because then that would drive traders' anticipation as to what the PCE figures were likely to be. The reason this week is so important is because last week, when the FOMC minutes were announced, this was on Wednesday, there were suggestions that the various members were starting to take the view that the aggressive stance on interest rates should in fact slow down over the coming months, and perhaps sooner than anticipated. And if the figures this coming week highlight that, i.e. lower inflation, rising unemployment, then we will see markets actually start to pick up. Now, next year will be a different kettle of fish, and we will cover that perhaps in a future video, because whilst short term, if the figures go as economists believe they're going to go, we could indeed see the dollar weaken a little and gold and silver rise short term. So next week, or this coming week, we have a raft of important data which could indeed affect the direction of the US dollar and gold and silver prices for the rest of the year. Obviously, the final FOMC meeting of the year will ultimately dictate that, but this week will provide quite a guide to what the FOMC is likely to decide later in the month of December. Now, I wish to emphasize that minutes from the Fed's November meeting released earlier this week showed that a substantial majority of policymakers agreed it would soon be appropriate to slow the pace of interest rate rises. Those remarks actually sent the dollar falling and gold prices rising, and if you look at the chart for Wednesday, you can see that quite clearly, as the Fed's aggressive rate increases and market expectations of how high the central bank could take them has been a major driver in the currency's at least 10% surge this year. Analysts are indeed a little torn as to the direction of gold and silver over the next couple of weeks, and many believe we are actually at an inflection point. Technically, if we can see gold break above the 200-day EMA, gold could quite easily sail upwards and beyond $1,800. If, however, gold breaks down, then 1680 could potentially be on the cards. Silver faces significant resistance at 22 and certainly very significant at 22.50. But if this is breached, then we cannot rule out $25 before the end of the year. If, however, silver breaks below $20, then $18 by the end of the year is again quite possible. Tradition has tended to show us that towards the end of the year, prices on average usually move up. Either way, for 2022, we do not see silver rising above $25.50 or below $17.50 from now on. That's where we see the ultimate range. However, we have some very interesting views on 2023, but we shall leave that for another video. As mentioned earlier, all eyes are currently on interest rate rises and their pace, and few are paying close attention at this stage to the global economy and the industrial demand for silver. So next week, we could see some significant turbulence depending on the data actually being announced. We still, however, see gold trading broadly within the range of $1,700 to $1,800, with $1,675 at the downside and $1,850 at the upside. They're our outlier range. And silver, which is a little bit more difficult to predict, we see trading broadly operate between $20.50 and $22, maybe $22.25, and $19.50 to the downside and $23 to the maximum outside. So that will be our outlier range. Now, what do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to the channel. Press the bell sign so you're notified of our videos as and when they're published. And we are going, through the course of this coming week, going to produce 1 or 2 extra videos, which we've only been producing the weekend ones so far, but this coming week there will be more. So please watch out for those, particularly as some of the data being announced during the course of the week is revealed. Finally, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.